大家好。最近的美股市场整体处在一个比较复杂的状态，科技股在高位波动 ，AI 交易依然拥挤，投资者一边是怕踏空的追涨心理，一边又是对泡沫的担忧。再看利率预期，不仅降息路径不再明确，甚至还有加息的可能性，使得高估值资产变得更加敏感。市场情绪也在被近期一些标志性事件放大，比如科技 IPO 的升温，以及备受关注的 SpaceX 上市后的一系列动态。在这种流动性与情绪交织的环境下，投资者更需要关注哪些因素，又该如何保持理性判断呢？我们邀请到 Franklin Templeton 高级副总裁、AI 与数字资产解决方案主管 Max Gokhman 一起聊聊科技股、IPO 以及当前的美股市场。Hi Max, thank you so much for joining us today. It's great to have you with us. So let's start with one of the hottest topics in the market right now. SpaceX has attracted huge attention since its IPO. So how do you interpret the recent volatility?
I would say at a high level, this is pretty mechanical and more of an not more of an price discovery, I would say. One thing that's different about SpaceX is most IPOs have an allocation to the retail market of around 5 to 10%. SpaceX actually had about a third of its allocation go to retail. And we know retail investors tend to be a lot more quick in their moves. So I think that contributed a lot to the volatility. And then we had the options market on SpaceX open on June 16th, just a few days after the IPO. And now there's over 1.5 million contracts trading every day in the options market. So that's further driving up the volatility. So I would expect that it's going to stay volatile. And really the catalyst is going to be when the lockups start expiring.
And just to follow up on that, you mentioned price discovery. Historically, we often see high-profile IPOs go through a prolonged price discovery phase after listing. What does that phase typically look like?
I think there's a couple catalysts that need to happen. So I mentioned the lockups. That's really important because, of course, there's going to be a lot of investors and employees who I would expect will want to start unloading their shares. So we need to see how the bid for that is going to come in from more long-term holders. There's also the question of how SpaceX is going to do after their first public earnings call, and that's going to be important. There's also been some questions about index inclusion. I think that's actually going to be less of an event because most indices look at the available float of a company to trade. So based on that metric, if SpaceX was to be included in the Russell 1000 index for now, for example, it would probably be just a little bit over 10 basis points of that index. So I don't think the index buyers will be really providing the bid against the post-lockup investors and employees who are selling. So that's going to be really, I think, the big price discovery question is how does SpaceX land when it's meeting that, real investor scrutiny from longer-term institutional capital.
So what should investors actually be watching most closely from here?
Sure. I think there's a couple key factors. So if you think about SpaceX, there's kind of 4 components to it. There's Starlink, which is, I think, about 60% or so of their 2025 revenue. And that's been the primary cash flow engine. So how is that going to continue? Are we going to be able to continue seeing growth there? There's the launch component, which really is pretty steady cash flow. They've got almost a monopoly on this effectively right now with their government contracts. And then there's the big moonshot number 1, which is Starship, right? I think a lot of investors who are bullish on SpaceX look at Starship as potentially the future. And then there's moonshot number 2, which is XAI. Now, XAI is currently pretty far behind other foundational models. If we think about, OpenAI or Anthropic, the other 2 big IPOs that are in the wings. And so I think there's a lot of questions on how that's going to play out. Because if we look at where all the cash that Starlink's generated has gone, most of it has gone to XAI. And I think that is going to be something that Elon Musk and the rest of the management committee is going to have to address to investors. So I'm very much looking forward to that first earnings call because I think Starlink makes sense. Launch makes sense. We can value those in a more traditional way. Starship, you kind of need to be a rocket scientist with a healthy optimism, I think, to appreciate. And then XAI, there's some tougher questions given the competition.
Beyond SpaceX, how would you describe current sentiment in tech markets? Are we at a point where positioning has become too crowded?
I think you can talk about tech right now about crowding. We've looked at a lot of investor surveys, a lot of discussions that we've had with our peers. Most everyone wants to be long semiconductors. It's one of the most crowded trades ever. And I think that is part of the broader AI theme. I'm in kind of an interesting place because I'm both an investor in AI, but I'm also a practitioner. I'm actually building AI models and working with all of the companies that I'm also evaluating. And I think the boom is real. But there is a concern that when you have so many investors with the same view, even when earnings are good, that's not good enough. You actually need to exceed expectations continuously. And as any industry matures, its ability to keep exceeding expectations falls because we kind of learn what to expect. And that's this paradox that we're seeing with the maturation of AI. So even though I'm fairly bullish, in fact, extremely bullish on AI as a theme and its transformational capacity, I am more careful about the allocation to some of the names that have seen so much of a run-up and so much crowding more recently.
Right. There's also growing concerns about the market is too dependent on a small group of large tech companies. So do you see that as a risk?
It is a risk. If we look at the S&P 500 in the US, about 40 names linked to AI produced about, say, 70% of profit. And that's very high concentration of earnings, right? Now, those earnings are real, right? Like this isn't multiple expansion. This is actual profit that is being generated, and that's why the multiples don't look scary to me. And also relative to what we saw, for example, in the dot-com bust, where we had revenue, but it was driven by Nortel laying fiber, and no one was actually using this fiber. Virtually all the world's GPUs are running hot, right? So even the ones that are kind of not the latest are still being used. I think the demand is still there, but there is a risk that we just, like I said, just don't meet the exceedingly high expectations. With that said, in my experience, you are better off being late than being early to reduce risk in situations like this, because usually the biggest gains come at the end, kind of, when we see euphoria, everyone's just buying all equities. And we haven't seen that yet. So there's still investors who are more cautious, even as most of them do like the AI theme. And therefore, until we see this kind of broad indiscriminate buying, I'm still comfortable, but I'm more picky about which names I like, right? So I'd rather avoid the more crowded names. I'd rather own names that are more balanced in the revenue sources or have a more inelastic demand curve, and also that aren't owned by every other investor.
On AI specifically, where do you think investors might be getting it wrong today?
So one of the things we've seen, which is really interesting, is we've actually seen even, token expenditure go down even as usage rises. And that's kind of a really interesting concept, right? So we're seeing pricing power of some of these foundational model makers actually go down, hence the lower cost per token and total token expense, even as more tokens are being consumed. So that's one really interesting thing. Another thing that I think from the AI user's perspective and from an AI investor perspective that I'm thinking about is the lack of regulation being globally coordinated. And I think one of the misconceptions is that we can keep growing AI without regulation that is global. And that's very difficult, right? Because it's hard enough to convince one government to do something. now we have to convince all governments. And we saw some of that more recently with one of the companies where they had to pull a model because of unspecified risks. That makes it hard for me as a developer to know whether the tools I'm using today will be available tomorrow. But as also a developer that's part of a global company, how do I work with potentially different regulatory climates? So that kind of coordination, I think, is a misunderstood risk, or perhaps I should say an underappreciated risk for this industry to really mature.
Markets are also adjusting to the Fed's new leadership. So what's your view on the interest rate path this year?
Kevin Warsh surprised me a little bit, I would actually have to say. Going into everything he was saying kind of leading up to the nomination, I thought that he was going to be quite dovish. But he's leaned a bit more hawkish. I also think he may channel the late Alan Greenspan quite a bit in terms of less guidance, a lot more opaque mystery, right? Alan Greenspan famously said that if you understood what he said, he must have misspoke. And I think Kevin Warsh may have a little bit of that, where he's not giving us a dot. He's not going to have these very detailed meetings like Chairman Powell had. And so with that, I do think the rest of the FOMC has been fairly hawkish, and Chairman Warsh isn't pushing back on that. So I think we may certainly see a hike before we see another cut. And as a base case, I would not expect any cuts this year. I think a hike is actually possible this year towards the end if we see inflation continue to creep up. And right now, it's running at 3.5% in the US. So, fourth quarter, you could actually see something that I think going in to this year, nobody expected.
So if what you just said turns out to be right, how would that fit through into tech stocks?
Yeah, so tech stocks are becoming ever more sensitive to interest rates. That's actually a really important point, right? Because we talked about how everyone loves techs, especially a lot of the components of techs like hyperscalers. Well, hyperscalers and SpaceX, which we talked about, are now also issuing a lot of debt, right? That's kind of the first thing that SpaceX did after they went public in the equity markets. They did this bond deal. They need to fund their capex. So that debt is very dependent, of course, on the interest rates of treasuries, which are dependent on the Fed rate. Additionally, all technology or high growth companies have most of their value in the future. Again, I would say SpaceX, you really have to project far out to when we put people on Mars to get that terminal value, right? So because the ultimate end value is so far in the future, you discount it back at the discount rate. The discount rate is the treasuries. So once again, you're tying these assets, these very long duration equity assets, to what the Fed is going to do. So I think there is a clear tie and a clear risk that if the Fed does hike, especially if they hike unexpectedly, which with the way Kevin Warsh has been acting seems more probable that he won't give as much of a heads up, that you could see a pullback in a lot of those tech names and names like SpaceX as well.
It sounds like markets may need to be more prepared for policy-driven volatility. So what kind of positioning or hedging makes sense in this environment?
Yeah, I think finding hedges is a very good idea right now. And, generally speaking, there's really a lot of periods where diversification pays off, and usually it pays off right after it seems like a bad idea. And right now, there's a lot of investors who, like we talked about, are very crowded in just a few themes, just a few regions.
So where do you see the best opportunities for diversification right now?
We actually like value stocks as an example, right? And part of that also is going to be an AI beneficiary story, right? So as we go from the foundational models and the hyperscalers, right? The hyperscalers are really spending all the money, and that helps out the semiconductor names. But then who's actually using that capacity? It's everyone else. Firms like us, we're using AI to make our processes better, to deliver better results to investors. That's a big part of my day-to-day job. So as we do that, we should see margin expansion. We should see higher revenues, right? And when I say we, it really is financial services. It's going to be retail. It's going to be defense. These are all value sector names. So I think there's value in value right now. And perhaps that's, more appreciated if you look at how value has done year to date. I think more investors are starting to drive towards that. But I think that's where you can find that broader pocket of opportunity relative to the more concentrated high growth tech names.
To wrap up, if you had to point to one biggest risk that investors might be underestimating in today's market, what would that be? And any advice for them?
I think the biggest risk is that all of your eggs are in one basket. So that's what I would say you should avoid. And I think diversifying not just within equities or within a region, but diversify globally and diversify across asset classes. Certainly within fixed income, spreads are tight, but there's still pockets of attractive carry. Within private assets, there's good opportunities, some of which have lower duration. I would say within digital assets, there's actually opportunities for yield and income that didn't exist before. So as we look at the scope of the investable universe, it's really expanded over the last decade. And yet I think a lot of investors want to invest in something new, but in the way that they know. And I think that perhaps would be my big advice is figure out how to invest in a new way to actually make yourself safer from concentration risk.
Finally, circling back to SpaceX and the broader IPO pipeline, some people say that SpaceX post-listing performance might set the tone for upcoming mega IPOs like OpenAI or Anthropic. So what's your take on that?
I think the next two big IPOs are going to be quite a bit different, right? Anthropic and OpenAI are both foundational model makers. SpaceX has a little bit of that through XAI, but it's just not anywhere close to the level of penetration in the market that Anthropic and OpenAI have. I think they're going to really be a big direct beneficiary of this theme. And I also think there's been a lot of investors who were buying names that were sort of adjacent to that theme, right? They're buying the semiconductor manufacturers, they're buying the hyperscalers, the enablers, but now they could buy the actual core name. So I think that rotation could also be positive for those names. But again, expect a lot of volatility when they open up. I think that parallel absolutely is going to be true. The market can absorb that sort of volume, especially given the fairly light float we're going to see from those names initially, similar to SpaceX. But once it's in the market, a lot of retail participation, a lot of volatility is probably what we're going to see.
Thank you, Max, for sharing your insight with us.